The Nitrogen Fund is a low volatility, long and short equity hedge fund managed on a fundamental basis with a value bias. The fund consists of two books, a long-term fundamental book and a short-term trading book. The fund has 183 million rand in funds under management. For more on the group's investment strategy, Rowan Williams, director at Nitrogen Fund Managers, joins us in studio. Rowan, thanks very much for your time.
Pleasure.
Now, you look at inception here, 2006. You've had a fabulous return since inception of around about 142%. We're going to ask you, how have you done it?
Hey?
It's terrible.
Yeah, I hate
it's
managers
terrible.
like that. It makes you feel so insecure.
You're making David feel insecure.
That's the idea. You're better than the competition.
So tell us what you're doing right here.
I think, as you mentioned, it's a long short with a fundamental basis, and really we're looking to find the right kind of stocks that will meet our return criteria, and also, I think, importantly, our risk criteria. And also importantly, through the process, the investment process with a hedge fund, being long short, gives you a lot more flexibility in terms of, I guess, and listening to some of the previous discussions, you can express your investment views both ways, in terms of something that's offering value, and that is our focus, but also something that is overvalued and therefore offers a good hedge to something that you think is showing good value, and that way dampen the volatility by really trying to expand the relative value between the long share and the short share. And that dampens the volatility a lot, but still delivers the returns.
So when you say you go short, would you say buy ShopRite, go short SPAR or something like that?
Yes.
Rather than say, I don't like retailers, I'm going short retailers.
It's both of those things.
Okay.
It can be both. So, and we do what we would call the first example is relative value.
Okay.
And so, there was, with Alvain, there was a discussion in terms of retailers, and clearly there's quite a lot of difference of opinion, and there's quite a lot of dynamics at play in the marketplace. And I guess our job and what we try to is take advantage of that. And so there is a lot of money, and the foreigners are price setters, we would see, in the South African retail stocks.
Are you net, do you go net short, or do you try to keep market neutral?
No, so the fund is basically, the mandate is we can go maximum 40% long, so we would have a net long bias. I think overall in the long term, stock markets move upwards given the cost of capital and returns in companies.
Perhaps just to further explain your strategy, can you take me through some of the calls that you've made? Obviously you don't want to share competitive information here, but historically, you know, how have you executed the strategies? Is this so that I can follow you and viewers can follow you?
Yeah, exactly. So let's take what we call a relative value pair trade. So and the term market neutral, it's been evolving in the hedge fund space to relative value. Okay. So basically you would say yes in the retail space, and you typically look at correlated stocks. So basically they have similar dynamics. But the pricing becomes very different over time for a variety of factors. Typically, there's more money flowing into one stock at that point in time to another. So we would look for stocks that we like, say Woolies. We love the fundamentals of that business. It's very well positioned. It has a lot of margin expansion still.
Defensive qualities.
Exactly. And wasn't well priced in terms of food and clothing. It actually, for a period, trade below the Ps of both food and clothing retailers. Meanwhile, it's half or more than half food, and food trades at a premium to clothing. So there was a clear value proposition there. So we would take that as a long. In order to meet our mandate of being within the 40% net long, we have to hedge out some of that, if not all of that, market exposure. And we would do that by looking for a similar type of retailer that we feel is overvalued. Now, in terms of its fundamentals, that we think the prices run ahead of the fundamentals, and you said some of these growth stocks, they sort of the performance catches up with the stock price, and I think that's the case. So, and there we would sell that share.
So it doesn't necessarily matter if the share price, even if you go short, it doesn't matter if it doesn't fall, as long as your Woolies outperform.
That's correct, and I think what happened, it even surprised us, where we thought Woolies was good value and would move to a certain level. It went way past that. And the short also may have gone up, but in a relative value, it moved. So it's still, and it's overperformed. So the short by 30% or 35%. And through that gearing process, you deliver the returns. And they tend to be reasonably smooth because I mentioned they're fairly correlated.
So that's the low volatility
and you get
element.
That expansion, yes, and that return over time.
And I mean, just on the market now, have you got any shorts? I mean, are you short of anything just on a pure naked point of view?
And interestingly, what we have done, we've moved net short retail.
Okay.
Because I think over time, and you're hearing it.
And Elvain was saying it as well.
So where we think it has run quite far ahead, and I think the foreigners, to some extent, he's correct. They buy a theme, and they don't look so much at the numbers. And I think a lot of it is driven by the African growth story, which I think is a real opportunity.
Yeah. It's sustainable.
Well, it is sustainable, but I think, and there was an interesting piece in Bloomberg's about 2 weeks ago on the retailers.
Are you allowed to mention their name on this show?
Yes, of course you can.
And
no airs and graces on CNBC.
So, oh gosh.
You've only realised now. You mean actually a report on CNBC.
Provided that we use.
Yes, absolutely.
The African growth story is going to take much longer than anticipated. Truworths has been in Africa for 20 years. Okay, Botswana, Namibia. But still, and the value that they're ascribing to that and the time it's going to take to, and we have that similar view. So we think it's there, but it's going to take longer to show in the numbers, and hence the shares may be overpriced.
So net short retailers, we were also discussing resources and an interesting debate taking place on the desk earlier this evening. How are you positioned, again, without sharing competitive information? What is your feeling around the resource stocks?
So resources, I would agree. I think the outlook for the global economy is generally poor, and there's been a lot of stimulus, and given the amount of stimulus, actually the recovery has been quite weak. And you've heard those comments coming from Bernanke and other central bankers. So we're quite bearish on resources, and we tend not to be experts in them, and in terms of investment world, if you're not an expert, you tend to stay away. Where we do take advantage of resources, we trade them a lot. And as markets become more volatile, and for example, now you mentioned June 17th, and I think it is a sort of a key date, and there's the stocks start to move around that. And I think and I believe there will be further stimulus coming from the States and from Europe, that will actually be positive for resources. But again, you can't be certain, but what you can be certain of is volatility. And there we tend to trade that volatility. Again, relative value, more shorter term
Do you do stocks
movements.
or do you do the actual metals? I mean,
no, we do stocks.
Okay.
It is becoming more easier with the ETFs, the listed ETFs, to trade the metals and the underlying. But we tend to trade, again, correlated stocks, the big mining giants or gold stocks against each other, and they're fairly large relative movements. Again, the foreigners play a big role, and if you're quite nimble, we're not that big a fund, we can trade that.
Well, you actually lead me to my next question, because you are nimble.
Yes.
And that obviously gives you an advantage. But have you capped your fund?
We have the cap, but it's quite significantly higher than the current size. We would cap it at 500 million. So,
and what are you looking for in terms of tranches? What size tranches do you take on?
Our minimum is R1 million, and that's really driven by regulations. But I guess so it would be R1 million and higher. So we do have high net worth individuals in the fund, as well as a number of large fund-of-fund hedge funds.
Are you giving Rowan a call tomorrow morning?
No, I like his performance.
Yeah,
I'm just going to ask.
there's nothing not to like about his performance.
Because I know Rowan, I know his brothers, and that they do their research. They're very thorough. So I'm going to ask him for a few tips on mainly on the small and medium cap shares. You know, at this. Are you looking at any of those at the moment? Is there anything that stands out? You know,
no, and I think
because we can't go away. The viewers have got to go away with somebody.
Everybody is glued to the screen right now. They say just one vote, please.
You know, you've got to have a tip. I mean,
right, so
a show without a tip, hey?
Let's go for it. Let's go for it.
Okay, well, the one we've bought most recently, so that would be, you know, what we think is good now, has been Nampak. So it's a fairly large company, and that's an interesting one. So that's a value stock, but it also has a lot of exposure to the African growth story and consumer African growth, because it's mainly packaging. And that's basically what the consumers are consuming. So it's defensive, it's fairly cheap. It's been going through a turnaround. It has a high dividend yield. So it sort of ticks all the boxes. And so you'll get the upside and the defensiveness.
I'm not going to let him give you any more tips. Thanks very much for that. You're going to have to phone him tomorrow, put money into his fund if you want any more. Exactly. Rowan, thanks very much for your time. Rowan Williams, Director at Nitrogen Fund Managers.